Kia ora. Welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news that gears of the global economy are grinding disconcertingly, as the unnecessary trade war is prosecuted with little strategy and no apparent viable endgame. But first up today, the latest full dairy auction brought an overall rise of 1.6% in US dollars. However, the fall of the US dollar has completely undermined this result, with prices in New Zealand dollars falling 2.1%. In US dollars, all categories except skim milk powder rose, and demand was strong, especially from North Asia, that is China. Milk fats are in demand, while the global milk supply is waning in major producers, underpinning the demand. Pity about the currency effect. Inflation is showing up in the retail trade in the US, with the weekly Red Book index up 6.6% from the same week a year ago. There is no way that reflects a volume rise. And business activity continued to fall in March in the New York Fed's factory survey in the New York state. New order levels extended their decline. In Canada, their CPI inflation rate eased lower to 2.3% in March. That is after the 8-month high of 2.6% in February. The March result was tamer than expected and below forecast by the central bank. It comes after some GST and other tax changes earlier have now been flushed through their data. The Bank of Canada next meets to review its official policy rate later today, but it will be the economic impact of their unfriendly neighbour that will determine policy rather than current inflation. They will likely hold off making rate changes for now, keeping the 2.75% policy rate. That is a change from an earlier expected cut. Canadian housing starts came in weak in March, down more than 11% from the same month a year ago. And Indian CPI inflation fell to 3.3%, its lowest since 2019. Food price inflation fell to 2.7%. Both were much lower than expected and well below the central bank policy rate midpoint of 4%. Indian exports rose sharply in March from February in their normal seasonal pattern. Their imports rose even more, so their trade deficit grew from the prior month, although only back to its usual level. In China, they are cancelling their orders for Boeing aircraft, a blow to the US aircraft industry. In February, EU industrial production rose, a surprise gain and the best monthly gain in 2 years. But that wasn't an indicator for economic sentiment. The latest ZEW survey reveals a sharp deterioration as they watch the US turn from friend to foe, making them feel boxed in between the US and Russia. It was a shift reminiscent of the uncertainty during the pandemic. And it seems that trade talks between the US and the EU are making little or no progress. In Australia, the latest release of the RBA minutes was a dull affair, giving little guidance on how they're going to deal with the trade and inflation challenges they face. It's all wait and see and respond to data for them. But they do claim to be in a good position to be able to act decisively if it is needed. A cut on May 20 is still possible, however. OPEC's latest monthly review lowered its demand outlook, although some observers thought the smallness of the cutback was brave in the circumstances. And we should also note that there are now 3 elections due soon. Canada goes to the polls on April the 28th, Australia votes on May the 3rd, and now a snap election has been called in Singapore, also for May the 3rd. Being Singapore, that unsurprisingly leaves very little time for campaigning. All these elections will have the Trump shadow hanging over them, and it very much helps campaigning to present an anti-Trump stance. Trump has resurrected the fortunes of the centre-left candidates, enough to cancel the anti-incumbent mood. The US Treasury 10-year yield is now at 4.33% and down another 4 basis points from this time yesterday. And the price of gold will start today at just on $3,229 an ounce, up $16 from yesterday. And oil prices have firmed marginally, up 50 cents to just on $61.50 a barrel in the US, while international Brent price is now at $64.50 a barrel. And the Kiwi dollar is now at 59.1 US cents, up 30 basis points from yesterday at this time, and the highest since mid-December. The fall in the US dollar extends. Against the Aussie, we're down 10 basis points at 92.9 Australian cents. Against the euro, though, we're up 30 basis points from yesterday at just on 52.4 euro cents. That all means our trade-weighted index starts today at just on 67.6 and up 30 basis points. And the Bitcoin price starts today at $84,616 and holding again, up a mere 0.1% from this time yesterday. Volatility of the past 24 hours has been modest, at plus or minus 1.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.